Hey guys, this is George David with George David Investing. So in today's video, we're going to be talking about that big elephant in the room, which is that Tesla. It feels like things are just going south. It feels like things are bleeding. We know if you're big crypto fans, things are kind of plateauing on the Bitcoin side. So what's going on? Is everything falling apart? Is there going to be more pain to endure? We're going to be talking about all of that in this video. So let's first start off with what the heck is going on with Tesla, all right? Has this changed anything? Is there something fundamentally wrong with the company? And the answer is absolutely no, because, most times a lot of companies, a lot of growth companies, anytime that there's any market fluctuation in terms of news, they're going to take a hit, especially companies like a Tesla, like an Apple, like a Facebook. Maybe less so on Apple because they're not overvalued to the extent that some of those other big tech companies are, like a Tesla. They're very, very sensitive to the news that's going on in the market. Now, two things. Number one, that's going to buy in some great times, especially if there's a correction that comes across. Remember in my previous video, I talked about how Tesla, for the first time since that one day during the COVID stock market crash, Tesla went below the 200-day moving average, which is the long-term moving average. Now, Tesla's had a couple days of that. So this dip is definitely significant, and it's definitely setting the stage for a potential technical correction, which I call as a death cross, which is when Tesla's stock price of the 200-day the 50-day goes below the 200-day. So there might be a really, really good opportunity to safely buy in at that time while also maximizing that future upside as well. What I was talking about there is a potential 20, 25, even 30x multiplier going into the future. Now, we're not talking about over the next 3 years. We're talking about 10, 12 years in that kind of horizon. Now, let's talk about another big elephant in the room, which is inflation. We've seen it everywhere. We've seen it in terms of lumber prices skyrocketing. I believe the latest figure is 200% or well over 200% if you take a look at things year over year. Now, those are supply chain issues, but here's the thing. Back in the mid-2000s with crude oil, when that was an issue, they didn't really try to open up that pipeline. So I don't think that lumber issue, that issue into the housing bubble, is necessarily going to all of a sudden be a transitory effect, which Jerome Powell of the Fed was talking about. I think this is actually going to be something that's going to last a little bit longer. And that's why there's some whispers going on that May's inflation rate, and if you do some shopping at the grocery store, if you're looking at housing prices, if you're pricing in gasoline, which is spiking with the pipeline hack, that number might be coming in at 5-6%, and that's going to spook the market. I wish I kind of had a Jim Cramer spook sound frame for that. But here's the thing, how that relates to Tesla. Tesla is very, very sensitive to these news items. When you take a look at inflation, the big issue with Tesla is technically inflation means that your earnings are valued less. And like I talked about in the previous video, Tesla is not in the game of earnings. Their best interest is take advantage of this cheap debt and continue to bang out growth rather than banging out trying to hit earnings. That can be done down the road once the company is reaching its market cap, kind of just like a Walmart, an ExxonMobil. They only reach like a certain point where their growth rate can stagnate about 5 to 7% a year. Yeah, at that point, now you're thinking about maximizing profitability. It is not in Tesla's best interest. However, that means that we all need to take a chill pill and take a Alka-Seltzer because it's going to be a bumpy ride, so strap down, folks. And the problem here is that it's coming through that inflation number. It's really going to spook that market. And all those companies like a Tesla are going to be very sensitive to that change. Again, so we're thinking 5-6% coming in May. That pipeline hack, which is also truly and technically a transitory effect, that's really going to exacerbate that number. There's some metropolitan areas. I know California, if you're watching from there, your gas price is around $4 a gallon. Leave a comment in the description below if you're feeling that pain at the pump, because that affects everything. That's not just affecting you, that's affecting businesses that are transporting goods and manufacturing goods. There's a huge impact with crude oil prices, and how that factors into inflation and how that starts causing economic stagnation. So let's break it all down really quickly about what we're looking at in the short term. So in the short term, these 5 effects I'm going to be talking about are going to be hitting Tesla hard. And that's not a problem. We're getting into some really, really good deals in the company. Now, again, I try to follow rules. I try to buy only at the Golden Cross because that minimizes the downside risk, because we know, all right, here's that next expansion period, especially for a growth company like Tesla, while also allows you to buy in at a good low price. You know that it's going to be going up from there, so you're not shortchanging yourself. So the big effects that we're talking about, number one is the inflation rate, all right? Tesla, unfortunately, we love Tesla. How many of you guys love Tesla? I absolutely love Tesla. It is an all-in company, not just domestically in terms of opportunity with electric vehicles that haven't been even tapped out, but also internationally. And then we're not even talking about the solar roof, the Powerwall, and some other innovative technologies that are in the pipeline. All in Tesla run rate, remember 2 videos back, approximately $36 billion a year. And that number is $600 billion, especially when you take into account the value of money with inflation, with this Fed printing that's going on about 10, 12, 15 years into the future. So there's well over a 1,289% growth multiplier. Markets usually overreact to that, and that's why we get a 20, 25, 30% X growth potential. But like I said, the pipeline hack, it has transitory effects. But I do think, and this is just an intuition on my end, if this happened before, think about like an Enron with the power outages consistently in California. Think about what happened on the Texas grid back in February. Is this a temporary effect, or is this something bigger? And we really have to watch out from what I talked about, which I think the news doesn't talk enough about, is the potential, what Ray Dalio calls second, third, fourth order consequences of those Russia sanctions, Russia retaliation. They paid a Colonial Pipeline paid a ransom to those Russian hackers. I don't think that this is a temporary thing. I really think that we should be, although it's a temporary thing in terms of the pipeline opening up, places like Virginia, North Carolina, South Carolina, those states that are having issues getting that fuel, they're not feeling that pain and the shortages. It was very concerning that up to 85% of gas stations in those very big, very populated states were basically lacking gas for a while. And that skyrocketed prices out there. There are people talking about $6, $7 a gallon gas just to try to cause an oil glut. Like I said many times in my previous videos, anytime you have an oil issue, you're basically going to be triggering the top of the market. If you go above 50% of the average 2-year prices, a pipeline hack like that in the future could just systematically drive that price up. So we got to be really careful with that, because that's going to affect Tesla. Again, but on the good side, if the top of the market happens, then we can get in on Tesla very well. Now, these other 2 factors I'm going to be talking about here is a correction. And that correction is going to be definitely coming across on that jumbo package of capital gains tax increases and also corporate tax increases, okay? And once that happens, basically the market has to factor in those lower earnings in the aggregate. It's going to cause a correction, then it prices it in because it's not really affecting employment levels. It's just basically impacting earnings. Then the market's going to go nice and back up. So those are one of those opportunities that will impact in combination with this inflation that we're experiencing and cause a technical sell-off. Enough so we have a good opportunity to safely go in on Tesla. The price is getting really good. It's not factoring in all the growth. It's not even factoring in all the profit potential. This is what I consider basically mass hysteria. Finally, let's talk about Russia sanctions, Russia retaliation. As I mentioned previously, when you have basically a country that is going to cut oil supply, especially in countries that depend on Russian oil, such as the European Union states, China, and that increases prices, that's going to start affecting their consumer spending. That's going to affect their businesses there. And that consumer spending is going to percolate back into those large tech companies such as Apple that does business in those international countries very heavily. About 40% of Apple's revenue is international. And if you have those countries all of a sudden cutting back on disposable and discretionary income spending, well, that's going to start causing that peak of the market, and we're going to start considering possibly the top of the market and going into the recession. So one of my final points here is the market is definitely overvalued, and you need to make sure you have the right growth vehicles. And that's why I'm all in on Tesla. But I got to say this, when that market does hit its bubble, that perfect storm of higher taxes and other considerations as well, it's going to be a dramatic sell-off. We might not see the sheer unemployment numbers, just similar to 2000, where it went from about 4% up to 6.3% in unemployment. But a lot of that tech-heavy space had a major sell-off. And that's why you don't want to buy in too high with Tesla. You want to be safe and buy in at that technical dip. You know, maybe it's not the lowest price, but you know and you feel confident that you're getting in at the right time. So that's my 2 cents on Tesla. I love Tesla. It's a great company. Moral of the story is here, we're going to be really carefully watching that inflation number. It might come in 5-6%. And if it comes in at 6%, that's higher than in 2008. This is not 2008, but in 2008, there was other factors that were going on that pushed everything off a cliff once that number with spiking oil prices drove inflation to 5.4% in June, July, August of 2008. Basically, that was the straw that broke the camel's back. Now, we don't have that kind of tight leash, but there's a lot of factors that are going on, and hopefully we'll get a nice correction with those taxes in combination with those inflationary numbers to get in a good buying period with Tesla. All right, guys. So that wraps up this video. I look forward to posting another one pretty soon. Don't want to miss that. If you haven't done so already, definitely smash that like button, subscribe to the channel. I try to provide as much free advice as possible that I can create, and I look forward to seeing you guys on the next video. All right, guys, have a great one.